This holiday season, let's talk about three big reasons investors can be thankful. Sure, 24 had its fair share of curveballs, but here's the good news. Inflation is cooling off, the Fed is cutting rates and hopefully some more cuts, and the markets have delivered strong returns. Now, it's not all sunshine and pumpkin pie. There are still challenges like market valuations, the national debt, and global tensions. But this is the perfect moment to pause and soak in the positive vibes and remember the power of staying the course with a well-balanced portfolio. Want to hear why these factors could set the stage for even more opportunities? Stick around. What I'll share next might just make you even more grateful to be an investor. Let's jump in. What a year it's been for the stock market. Tech and AI have been the MVPs, but plenty of other sectors have joined the party with double-digit gains. All this despite geopolitical tensions, a presidential election, and constant chatter about where the economy is heading. Check out this chart. Other than one hiccup in the third quarter last year, markets have been on a solid growth streak for 2 years, fueled by strong corporate earnings and growing economic optimism. But here's the catch. Strong growth has pushed valuations higher, with the S&P 500 now sporting a price-to-earnings ratio of 22.3. That's a gentle nudge, wink, wink, to stay diversified and avoid going all in on one sector. And with the year coming to a close, there's no better time to give your portfolio a checkup. Are you set up to stay balanced and weather whatever comes next? Let's talk inflation. This chart breaks down the Consumer Price Index, or CPI, the go-to measure for tracking how prices are moving on everything from groceries to gas. The good news, inflation, or the rate at which prices are rising, has cooled off to move to more normal levels. This gives the Fed some breathing room, and they've already cut interest rates twice as a result. But let's clear up a common mix-up. Slowing inflation doesn't mean prices are dropping. It just means they're not rising as quickly. Everyday essentials? Yeah, they're probably staying pricey for a while. That dollar menu is not coming back anytime soon, if it ever does at all. Now, here's the big picture. While everyone's laser focused on when and how fast the Fed cuts rates, what really matters is the direction we're headed. Lower inflation and interest rates help consumers, businesses, and drum roll, the economy and markets too. Let's talk jobs. This chart tracks job creation re-indexed to the year 2000, and it tells an incredible story. When the Fed started raising interest rates, many feared a hard landing that could freeze hiring faster than Frosty the Snowman without his magical hat. But guess what? The job market proved to be as resilient as Santa's sleigh on Christmas Eve, delivering way more than expected. Hiring has bounced back and even exceeded the losses we saw during the pandemic. While recent reports have softened a bit, unemployment remains impressively low at 4.1%. And the U.S. economy? Still spreading cheer, thanks in no small part to consumer spending giving that little extra boost. Sure, market volatility can feel like finding coal in your stocking, but as we close out 24, there's plenty of good news to celebrate. Let's focus on these wins and keep building towards your financial goals. If you'd like to unwrap these trends in more detail or review your financial plans for the year ahead, don't hesitate to reach out. Merry Christmas, and here's to a prosperous 2025.